Sanjay Dutt, Director of Quantum Securities. He joins us live from Delhi. Sanjay, good morning and thank you for joining us. Sanjay, let's start with a zing in your voice because I'm sure on Friday you went home long.
Nikunj, I've been long for a few days, for quite some time, but I've been wrong. But this time, hopefully, I'll be lucky and I'll continue to maintain my longs. But just rebutting a little bit of what Mr. Maklai said there, I think it's too early to, be euphoric that, India is changing and Aam Aadmi all over or whatever, we will change and we'll have honest governance in 10 years, etc., etc. My problem is that the core issues don't go away because if you just spend a little time reading the manifesto of the Aam Aadmi, I'm sorry, I would never want to vote for that party. Not that I would want to vote for them because they are a party which is anti-corruption and of course all of us want clean governance. But we cannot live with populist issues like 50% reduction in tariff and free water and all those free lunches and then, expect that, everything will be, the GDP will go up 2 or 3% because we'll have a corruption-free government. If that's the agenda we are heading towards, then we are back to leftist secularism. So that kind of thing really worries me. We need to get pragmatic and realistic as to where we are headed. But that's just a general comment because, yes, I am a supporter of change. I am a supporter of clean governance. I'm a supporter of good corporate governance, more than clean governance being in the investment markets. But I don't think it's as simple as that. A 27 or 28 seat victory of Aam Aadmi Party is kind of changing the color of politics or changing the canvas of India.
Sanjay, we are at a record high. No one is excited. No one has participated. The feeling of carnival is missing and everyone is feeling left out.
Yeah, Nikunj, just the 4-0 you're out of Congress does not change the fundamentals over the weekend, does not change our problems, does not solve inflation, does not solve many things. Yes, future does look a little better. We probably would get a clearer, a definite mandate in 2014 elections, probably as it stands in favor of BJP. We may have decisive action happening on the economy and turnaround. But let me tell you one thing, that economy and a lot of other fundamentals that one is seeing in early stages have more or less bottomed out. So in 2014, whether you have a BJP-led government or you have a ND or you have a UPA-led government, the economy is turning around, so therefore the markets would turn around. But I think the euphoria, etc., not setting in because if you see the broader market, it still would be at the 18,000 BSE Sensex and not at the 22, 23,000 as what the indices make out today to be because we still haven't seen, the gains spread out because the core problems haven't gone away. Yes, sentiment is running ahead of the fundamentals at this point of time, but fundamentals need to catch up and correct, which they will, of course, with time, like I said.
Sanjay, so what's the sense that you're getting in the near term? I mean, how does one diversify one's portfolio? Still stick it with names which have given you good returns in the past, the likes of IT, pharma, couple of the FMCG names, or completely shift out and diversify into names like capital goods, underperforming banks, as well as power to some degree?
I think the focus is to be clear bottom up. I'm not saying that the FMCG will not do well, pharma will not do well. Yes, FMCG, pharma and the old defensives are overowned. As sectoral calls, they will not outperform going ahead. You will have other sectors which will outperform. But in all sectors, you will have to look at a good companies, good balance sheets, do a lot of bottom-up approach, bottom-up work in looking at companies which will benefit from the turnaround in the economy and the macro situation. And of course, policy action that may happen in the next 6 odd months. So yes, banks do look good. They've been beaten down beyond what they should be. Of course, a lot of cyclicals make a lot of sense. Interest rate sensitives make a lot of sense. But within them, you'll have to do your homework and buy stuff. Companies still that have phenomenal bloated debt on their balance sheets will still take 2, 3, 5 years to restructure, sell assets. Those companies I wouldn't like to buy. Of course, you'll get trading opportunities and trading pops in them to, get in and get out. But beyond that, no.
So is what we're seeing in power companies of late a trading pop, or is this an investment opportunity?
No, I think it's an investment opportunity, but one would still have to understand the timing because, you know, these days 20-30% in the trading pop itself will take away the annualized return that you're looking at. So if you enter at the wrong time, when the euphoria is there in a morning like this, when everything probably is up 10-20% over the last week, 10 days, and you're entering, you might be trudging in the danger zone. So therefore, look for a bad day, look for a day when the sector is totally ignored. And we've seen this happening in all the sector. We've seen this happening in the banking sector over the last 3 months. We've had euphoria to real doomsday situations within a span of three months in the banking sector itself. So I think that's where one needs to be very careful of timing. It's not an easy game, and that's the reason why you're not seeing good retail participation coming in, because it's very difficult to game that entry and exit for, you know, investor on the street, because he gets swayed by sentiment, news flows, ability to understand balance sheets and problems and what to buy.
What about banks, both PSUs as well as private? If your assumption is that perhaps the economy may have bottomed out at least, if not seen a sharp reversal and recovery, banks would be a good bet.
100% I agree, and I would focus on PSU banks and not on private sector banks, because I think we've still got a bit of a stretch in terms of valuation there. Public sector banks, I think a good quality public sector banks which don't have major issues, or which do, of course, everyone has NPAs, etc., but ones that still have good managements and have cleaned up a lot in the last 2 to 3 years are the places to be.
Sanjay, if I look at the absolute gainers for this year, it is clearly IT, pharma, and quality companies. Do you think that regime will change for 2014, or given all the fears which are around